big thank you to the organizers for giving us the chance to present our own pitch, if you wish, like the great starters we have seen so far. So today, my colleague Maximo and me, we are representing the European Investment Bank. So this is the bank of the European Union, whose shareholders are the member states. We are an institution that was established in 1958 with the aim of providing long-term lending in support of the EU objectives. And since then, we have invested more than 1.5 trillion euros across more than 15,000 projects. Just to give you a glimpse of our activities last year, so new lending, total volumes were about 72 billion euros, out of which 15.5 went to innovation, digital, and human capital projects, which, as you can guess, is the reason why we are here today. So today, my colleague and I will be guiding you through the services we offer for startups and scale-ups. Who is eligible for that? We will talk a bit about our venture debt product, and we will also go through our recent investments in cybersecurity. So starting from advisory, we provide free of charge advisory services to innovative EU-based digital companies on their bankability and financing of their business plans, and we act as an entry point for financing applications at the European Investment Bank. What do we mean by financial advisory? It's a case by case, so we can, for instance, work together with the company in defining a business plan, work with them on building a robust financial model. We can even just review their investor materials and come back with feedback. Ultimately, the aim is to support them in accessing European Investment Bank funding. When it comes to the eligibility criteria, in order to access that, there are four criteria we take into consideration. We are looking for companies that have innovative business models, so that covers cybersecurity, but also other verticals such as quantum, artificial intelligence, machine learning, etc. We are looking for companies that have significant research and development investments foreseen over the next 2-3 years, and those investments need to take place either in the EU or mostly in the EU. We are looking for companies with some good traction in terms of capital raising, so companies that have already raised seed capital and ideally Series A capital. And finally, we are looking for companies that are run by a professional management and they have an adequate corporate governance in place. So for eligible successful candidates, we put together a strong financing application. We liaise with our technical and financial colleagues, and it is actually a ventures debt team who will take it forward. So with this, I pass it over to you, Maximo.
Well, I extend the thanks to the organizers for inviting us today, and also congratulations to all the startups that we have seen, because it's pretty exciting to see so many good ideas. And though it might be a bit early for the startups that we have seen today to apply for our financing, I think it's good that you know that we exist and what our product is, because it's one of the main products that we have for investing directly in startups, especially in such an innovative area like cybersecurity, which for us, it's key, it's a strategic sector, and since 2016, we launched the program of venture debt at the EIB. We have tried to find companies that have reached a stage that it's substantial for us to invest. So I would like to just give a few highlights of the type of financing that we provide, which is venture debt. It's a standard product in the market, but there are a few changes, if you may say, when you are dealing with the EIB. First of all, it's about the ticket size. So typically we are looking into ticket sizes that are minimum 7.5 million, and they can go up to 50 million. But that doesn't mean that we cover all the expenditures that the companies may have. I mean, we are always trying to crowd in financing, and for doing that, what we are asking is always for the companies to have at least 50% of the expenditures. So we can cover up to 50% of the expenditures that the companies are planning to have in the next 3 to 4 years. So what it means in practice is that companies that we are looking for, they need to start with at least a picture of 15 million euros to be spent in the next 3 to 4 years. And that's the starting point where we can have a discussion and see if venture debt is something that qualifies for companies. Typically, our financing is given in one go, but the disbursements of the tranches can be split in up to 2 or 3 tranches, so it doesn't need to have a full commitment from the very beginning. So it's more like a loan structure where you have an available line of certain amount, and then you can split it, and we have certain flexibilities to establish how these amounts will be disbursed over time, most of the time, depending on operational milestones or on business plans, making sure that the companies are executing as planned and that they have the resources as the capacity to digest this financing. And of course, since it's venture debt, the idea is that we are not an equity provider, we are a debt provider, but in order to compensate for the, let's say, equity risk, what we ask is typically for warrants, which is nothing else than options on shares. So that's why it gives us a flavor of being debt, but without diluting too much the shareholders of the company. Typically, the good thing of our financing as well, compared to private debt provider, for example, is that we are a big institution and we have availability of capital for a long term. So we can provide the structures that are bullet, so you don't need to get cash flows from the companies, even up to 5 years from the moment that this is disbursed. So that's very attractive for companies that are in a stage of growth, and what they need is, okay, I need capital to reach a growth stage, and I don't need the cash flows to go out of my company, so we provide with this patient capital that allows companies to grow. So in terms of advantages, you can guess a bit from what I have said, okay, for companies, of course, as I was saying, having a long tenor financing is good because it provides stability, and it also allows the companies to focus on the daily business and not so much on repaying the debt and what's my status, Also, the fact that we have large tickets give companies an option to grow and to go to the next stage of a much bigger growth or even reaching a scale-up stage. So, of course, they need to digest funds, but with those funds, they manage to get to the next stage. Then also, what we were saying is that since we are a AAA financier, we have quite a bit of flexibility in terms of how we can structure the capital that we provide to the companies. And, well, we have, in the end, we are a policy-driven institution. We are the Bank of the EU, so if you pass all our criteria and all our procedures and all our analysis of the companies, I mean, that's really a quality stamp that the investor know that a company that has gone through our process and that has complied with all our criteria, it's quite credible and it's quite well managed, let's say. So that's in terms of the advantages for the company. For the founders, as I was saying, in the end, what we are providing is non-dilutive capital, so they can see that they are getting finance without diluting their ownership in the company. We never take a role in the daily activities of the company. Typically, we just leave the company to be run by the main founders and also VC investors that are in the table. And perhaps we ask for a board of service, but we don't take any role in the execution of the company's roadmap. And also it gives, of course, good visibility because we are well known in the European market and companies can get quite a lot of visibility through us. And finally, for investors that are also part of the companies, well, they see us as a complement to equity investments, so they don't need like other investors to fight with. They also see that they are not diluted with us, and that they see that there's a reduction in needs of equity for the companies to reach the next stage. And since 2016, as I was saying when we started the program, I mean, we have a few companies that reached that stage and that we have already signed commitments and disbursed financing to them in the countries of Ireland, Germany, Netherlands, Sweden, and in here you can see some of the logos. I mean, it's still an early stage, but it's definitely a sector that we are seeing a lot of attractiveness in the last few years with the rise of cybersecurity threats and with the increased awareness in the importance of such a sector as cybersecurity in Europe. So we are really, really, really looking forward and trying to keep an eye on all the potential candidates for the future. So that's a bit in a nutshell and these are our cards and our contacts. And well, we have a big website, EIB, and EIB Venture Debt, we also have a particular website. So if you have any questions that you have more interest in getting to know, I mean, just please get to the website or reach us directly. Thank you very much, and that's it.